Good afternoon, everybody. Welcome to TraderMerlin Show. It is the second to last show for the year. It's December 28th today. Hope you all did well out there, even though I suggested that most people don't trade. Down another 1% for our broad market indexes, but I'm not going to go into chart analysis. Maybe at the end of this, we'll look at stuff that you want to look at with regards to charts. As I mentioned, today's show is going to be slightly different. I'm going to look at end-of-year trading performance analysis, which for me is something that's very important. It's critical, at least for my mind, to understand what I've done right, what I've done wrong, what are my strengths, what are some weaknesses, and do that with I guess an open mind. You know, we all want to look at ourselves and say, oh, I'm doing so great and things are fantastic, but there's always going to be flaws out there. So I basically sat down with all my accounts and I looked through and I basically said, are there any outliers? Is there anything that was a big loss that caused me to, have drawdowns this year? What was my win to loss ratio? Maybe what's my reward to risk ratio, which is something that actually will come up in this session because of, I just felt like my reward to risk ratio was rather low for one of my larger accounts, which is somewhat frustrating. We'll address that. Also to find out maybe what I'm trading best. You may not like it, know it, or believe it, but there's something that you trade better than anything else. It's just it's a matter of fact. If you trade 10 different things, one of those you're going to have made more money with, and one of those you'll have lost more money with. No clue why that is. It just is. And in my attitude, you don't have to follow this, but if that is in fact the case, then I want to focus on which one I have been trading the best and making the most money with, and just keep riding that horse, right? It's like, if you're sitting there playing roulette and it keeps coming up red, well, that's your horse. Keep playing red. Oh, but it's going to come up black at some point. Sure, it's a 49% chance it's going to be black, 49% chance it's going to be red. Just keep on going with it. Yeah, I don't think Santa's coming, guys. We may see the worst Santa Claus rally in the history of markets. I will still keep my trade open. It's costing me a good amount of money at this point, but we'll let you know on January 2nd when that trade is closed what the end results was for the Santa Claus rally, but it's certainly not very good right now. With this, I want to make sure I'm very clear on this. This is no attempt, no way on my part to sound braggadocious that, oh, I did well. I know some people struggled this year. I know some of you probably did really well and may have had rates of return that were far better than mine. I don't care. This is not a pissing contest, right? I'm on an island by myself trying to trade these markets in the best way I see fit to earn a rate of return that is commensurate to my amount of risk taken. You're going to be different. So I may go through some numbers here and some of you might be like, oh, God, that's nothing. Oh, big deal. I made someone yesterday boasting about, 200% gain or $200,000 in made in a day. Good, great for you. Don't particularly care. This is to show you the process of what I go through so that I can make myself better. I'm not trying to be better than you. I'm not trying to make more money than you. I could care less. I hope you all are doing well, but bottom line is we have to be responsible for ourselves. It's kind of like saying Tiger Woods on the golf course doesn't really care what his competition is doing. He has to go out and play his best game on any given day. And if you do that and you do it well and you learn from your mistakes, then you can maybe be one of the best golfers in the world. And even Tiger Woods has a golf coach. Yes, there are some braggers out there. It's okay. So let me start off with, would it be fine if I stayed in cash? Well, let's start there, Chris. That's a good point. One of the things that I do to benchmark my success is, and I mentioned this, I look at what the market did, right? Because in theory, if you didn't want to be a trader, you could have just bought SPY, put everything in SPY, and just left it there and said, okay, I'm going to do whatever the market is. Well, if you did that, here's a chart of the S&P 500 right now. If we go back to January 3rd, which is the first official trading day of the year, to where we are as of this exact moment, the S&P is down 19.69%. So as horrible as this sounds, my belief system is that if you lost less than 19%, you beat the market. So if your account was down 10%, you beat the market. You did good. I know it sounds horrible, but you're right. Being in cash would have been better in this market for a lot of people. So just keep that in mind as you perform analysis. For example, if this market was up 30% and I had 20% gains, I would feel like I underperformed the market. And I would be frustrated with myself and trying to figure out what I could have done to do better there. So these are honest, truthful numbers, so you can love it or hate it. Don't particularly care. I know that people take this information the wrong way sometimes, so All right, let's go through the negatives. So I'm going to walk through just a couple of the negative things. And I'll be honest, there really wasn't too much this year that I felt like really frustrated with. There wasn't anything I look back and went, man, I really screwed up on that one. So, for example, we could go back to the year 2020, and I'm sure some of the viewers here would put it in my face. Oh, you remember your S&P put position? We had 420 puts. Oh, I remember that. And I knew going in that was overly aggressive, and that was certainly a major negative for that year, particularly from a rate of return perspective. This year, I didn't really have any those kind of all-in moments. It was really kind of chipping away, being careful at it, and a couple of things actually did hurt me, and that's what we'll talk about right now. So first thing on there, I had some long-term positions in one of my larger trading accounts that, even though I was selling some calls against those positions to lower the cost basis, those hurt. And, I probably should have bailed on those positions earlier. That's, something that was a mistake that I made. But I decided to hold on to those positions, and those ultimately caused that one account in particular to be negative for the year, which I was kind of frustrated about. But we practice and preach at Online Trading Academy that you should always have stop losses. You should never let positions get further away from you. But I ended up holding those positions through times I probably should have bailed, and that's on me. I made that mistake. I was of the belief that I could sell options against it, collect that premium, and it would slowly curve back up. And unfortunately, those positions did not do that, and resulted in some of the larger losses in that specific account, which ended up dragging it down. So that was one of my major negatives, was just losses on some of my long-term positions. What was my second piece here? I got a little over-aggressive in November and December. So that, again, was on me. I actually have been very even-keeled this year. I feel like I have been very systematic, which is the goal for me, is to make it almost robotic. And when we got in the middle of November, there was a lot of whipsawing going, but we also had that, it started to kind of reverse itself. And I was really thinking that we'd have that strong end-of-year rally. Let's go here. So you can see November, we had this really nice, actually started in mid-October, but we had this really nice move up. And I actually did fairly well for part of it, but there were a couple really big down days that just crushed me. In particular, this one in early November, I remember this 2-day or 3-day drop here was rough. It was one that took a big chunk away from me because I had gotten rather aggressive at that point, feeling like we had a nice breakout trade coming, and I stopped myself out, and of course it ended up rallying up. And it just kind of felt like I got whipsawed in November and December in this little bit of an uptrend. Pepe says, Merlin, I still don't understand if you're a supply and demand trader. Why are you holding? So I don't have just one account. I have many accounts, and in each one I do different things. So in this specific account that I'm mentioning, yeah, there were some positions that were held in there. For the most part, they don't. And that's a tough one, Tom. What's a good stop loss for covered calls? Is exactly that situation. I was like, okay, I know it's going to rally back up at some point. Let's set that as my target and collect more premium there. Unfortunately, these ones drifted down to finally I said I've had enough and dumped it, and took some decent losses. So Pepe, with every account, it's going to be different. So what I'm reviewing here, by the way, is just my trading accounts. I'm talking my options, I'm talking my futures, I'm talking my Forex, I'm talking my stock. This crypto doesn't involve in this at all, right? There is no analysis on crypto. If I did analyze crypto in here, I'd probably be negative for the year. But again, those are not trading vehicles for me. Those are investments, and that's a separate vehicle. So then they have like 30 separate accounts in crypto. So it would be too much work there. That's just buy and hold. So what I'm going to show you here is just my options, my futures, my stocks, and my Forex. Yes, well, again, he says it kind of contradicts you. It doesn't contradict me. Each account has a specific target objective, and the target objective for my crypto is 5 to 10 years, so I could care less what happens over there. It doesn't matter to me at all that I'm down 80% on that portfolio since November of last year. That is not something that I'm going to, how do I put it? I'm not going to implement a new strategy when it's buy and hold, and that's all that account is going to be. I made a couple trades in there just for fun to test out systems and networks, but no, I'm long-term holding there. So I'm showing you just my options, futures, Forex, and stock accounts. Let's see. So I got over aggressive in November and December, and that was, cause for some of the losses. I had 2 trades. This was early in the year, actually, where I I had some options trades, and I was long on either puts or calls. I don't remember exactly, but there were two specific trades that stood out for me where I looked at the market and I thought, okay, this market has the potential to go in the direction that I think it is, so I'm basically going to hold on to these a little bit longer. So generally when I'm long a call option or long a put, I have a time limit, and generally that time limit is I will not hold it closer than 30 days to expiration. As you guys that trade options know, your time decay just falls off a cliff in the last 30 days. So you lose so much value just because of time in the last 30 days. Generally, I won't hold it. And in two situations, and both of those burned me, was kind of interesting. I was like, you know what? It's starting to curve back up here. In the one call example, I remember curl back up in my favor. I will hold on to this option past the time that I usually bail on it, and I ended up writing those both into expiration at worthless. So that was one that, okay, I can't do that because, look back at the results, I realized that those were, I could have saved myself a few $1,000s easily just by bailing when I was supposed to and not have taken the chance that these were going to come back in the next 30 days, and they did not. Both of those expired worthless. So that was another big takeaway. Let me see real quick here. This is one, and this isn't reflective of all my accounts, but this is my larger active. So I have 4 options accounts. I have 2 accounts that are stocks. I have a futures, a Forex account. So you're looking at about 8 different accounts here. In my active trading, I like to be much higher than this, but I have a reward to risk ratio of 1.31, or sorry, risk to reward ratio of 1.31. That is, for me, particularly low. And I have to say that if I look back at my 2022 results, this is probably the area that I need to work on most. Sorry, I'm reading the comments at the same time. So generally, I'm going to be closer to 1.7, 1.8 on these ones, which tells me that I'm not being as selective on my trades. I may be jumping onto things, but more importantly, I'm not letting winners run. And maybe some of those trades were due to whipsawing market action, or maybe I was just, looking to kind of get my profit off the table. But to have a 1.31 risk to reward ratio for me is not good. It doesn't give you a lot of wiggle room with regards to your trades. I've mentioned many times I never want to be shooting for 1-to-1 because you're basically a 50-50 coin flip, and most people take more losses than they do gains. So that was rather frustrating to me. Not frustrating, it's just an eye-opener to actually see what that R&R number was. And my main focus is specifically in this account that had the 1.31 is to get that back up to something like 1.7. I would love to get it to 2-to-1. Ideally, obviously higher than that, but 2-to-1, I feel like I can do very well over the course of time at a 2-to-1. But this was probably the most noticeable thing in my account this year, which is lower than historical norms for me. And let's see. So in negatives, what I generally do is I look at my worst performing account, I look at my best performing account. And the main reason that I had bad performance in this one particular account was because of the long-term positions and letting those 2 options trades rail against me. Other than that, I was actually fairly consistent in that one, but I had just big position drawdowns. And that ended up in this specific account giving me what I hate to talk about, which is a negative return. So that was my worst performer for 2022. I got 2023 on that. Let's not foreshadow or jinx myself at all. Down 7%. And that is obviously, for me, I hate it. I don't like to have losing accounts, although it happens. Was rather frustrating with that. That said, it is what it is. I guess I could look at it at face value and say, hey, markets are down 20. You only lost 7, but still, I don't like to have losses like that in my accounts. It's really frustrating. But all in all, when I look at the net numbers, there's nothing on that list I just showed you that is catastrophic, right? There's nothing on that list that I can't fix. I can't make minor adjustments to my strategy next year and say, okay, we can fix those and have a resolution. The most challenging one, you guys tell me, what do you think's the most challenging one on here? If I look at the negatives, at least for my accounts this year, I had losses on some long-term positions, over-aggressive in November and December, 2 trades where I gave a chance for positions to recover using options, both expired worthless, and low rate of return of 1.31, worst account performance, -7. So what do you think is the most challenging thing in there for me to fix in 2023? To me, it's glaringly obvious. Holding those long-term positions, that was silly. That's on me. Thomasina says number 2, being over aggressive. Not really. I mean, I can keep it calm. Number 2, trade where I give a chance. That's just hopium, letting something run. To me, the most challenging part's going to be that low rate of return, right? Because I really have to now focus a lot more on, once I'm in something, let's do a little bit more work as far as staying in that trade, right? Trade management. How am I setting my stop losses? Are my stop losses too tight? I'll go back and review and see what it was that was potentially getting me out. Unfortunately, you guys know it's just a landslide of data. So I know that my reward risk ratio is 1.31, but I need to go back through and find out the ones that caused that number to be so low, because obviously there were some that were 3-to-1, and there were some that were like 0.5-to-1. Well, I need to go back and look at that 0.5 and what was it that got me out early, right? What was it? What cause was it? News related? Was it market related? Was it chart related? Those are the types of things that I think I need to fix, and I think that'll be the most challenging part. Which, as Daryl says, risk management. Yeah, that really does tie into the risk management side of things. So, all in all, I have to say, I feel I'm happy the way that 2022 turned out. I think I did. I think I had a very good year. There wasn't any super high flyer gains. There wasn't any catastrophic losses. So I feel good that I'm kind of middle of the road. I don't like that I had a negative account. Obviously, we want all of our accounts to be positive, but unfortunately, that happened. So I'll take it. I'll take it. No big deal. Here's where I started to have a little bit of fun, was the positive side of things. So, as you guys know, I'm not an options expert. I am absolutely, I would claim to be a neophyte. I have a very simple strategies that I use, but I'm mixing it up and I'm trying different techniques in different accounts. As I told you, I have 4 different options accounts. Most of those involve the selling and collecting a premium. That said, my biggest takeaway, at least for this year over the previous ones, is I had excellent consistency in all my options accounts. And I mean, let me ask you guys, when you look at your trading results, what would you say is a good win percentage, right? So on the spectrum of I won 0%, the other end is I won 100%. Obviously, we all want to win every single trade, but you know that's not going to happen. It's mathematically impossible to win every single trade that you do, unless you talk to specific traders that are liars, but you're never going to do it. What would you say is a good win percentage where if you had this win percentage, pretty confident you could just grind money out of the market year after year after year after year after year? Give me a number. What would you and it maybe be for yourself or just industry standard. What do you think would be a win percentage? Now remember, it's not just win percentage, it's also the rate of return. 3%? No way. 3% win percentage, meaning I'm not talking about profit, I'm talking wins versus losses, right? So if you say, hey, I'm right 85, Believable Direction says I'm right 85% of the time. If you're right 85% of the time, you better be knocking it out of the freaking park. I mean, absolutely killing it with 85% win ratio. That's phenomenal. A spread option trading, 85% win. Yep, there you go. The difficulty there for 2 wins out of 3 trades. So you're talking a 66 win percentage, FPL. And I would argue that if you get 66%, you should be doing pretty good. As long as you have a reward to risk ratio, right? If you have a totally skewed reward to risk ratio that's against you, you won't be doing any good. Yeah, and Thomasina, I would personally say that 60% is a little low. I think that you could start to step that up, right? Step it up higher, but you got to have a benchmark to start with. So I would shoot for 60% and then move up from there. When I was a really active day trader, getting to 65% win ratio, people are like, oh, that's not very good. When you're doing as much volume as I was doing and you had a 65% win ratio, it translated into pretty good money. So 40% wins and double the win size to loss. Sure, you could make money that way, OG, but here's the kicker. If you have 40% wins, so this is going to sound condescending, don't take it the wrong way, OG, but I'm a math person. We know that if we flip a coin, we have a 50% probability of heads, 50% probability of tails. There's no other mathematical certainty other than that. So if you have a 40% win ratio, I would argue start flipping a coin. Flip a coin, say if it's heads, I'm going to go long, tails, I'm going to go short. And as long as you have that 2-to-1 reward to risk ratio, you'll do fine. So anything under 50%, I would argue you got problems. And there's something fundamentally wrong in the way that you're making your trades. If you're under 50%, right? Your goal should be to get above 50. So this is the number that I have not had since, I want to say 2007 or 2006 or 2007. I had just a phenomenal, one of those years you're like, man, if I did this every year, I'll be rich by 5 years from now. I had a 94% win ratio in my options accounts, and I'm pretty impressed with that. And I got to say that there were 3 of those losing trades of the 6% that lost. There were 3 of those where I was exercised the shares and it fell against me, and I was selling calls. And even though I closed my position that I was long in the stock for a loss, I actually made money if you take the premiums and deduct it from that. So technically, I would argue it's even higher than 94, but 94% win ratio for me was like eye-opening. I was really impressed with that one. Like, okay. And right away, what I'm thinking automatically is I'm focusing now for the remainder of this year, last few days, is okay, let's write more strict rules around what I was doing in those accounts and look to emulate that every year, right? If I can get 94% win ratio, how many times I can screw up and still make money, as long as I don't have colossal losses. To me, that was the most eye-opening thing for my 2021 analysis, actually looking through those numbers and saw 94% win ratio. I was like, whoa, are you kidding me? All right, good. And that was just in one account, right? Some of the other options accounts, I was down in the 80% range, but that was my best one. And I was like, okay. My best asset class, so not asset class, but specifically, let's see, I have no problem taking small losses, just holding winners too long and giving back a little too much. Yeah, that's always a tough one, skilled stocksman. Always is. Most people start off with the wrong mindset, which is, oh, well, I don't want to take a loss, so I'll keep it open, and then all of a sudden they take a monumental loss. That's one that most newbies have to get past. So in looking at what I traded, I've noticed that this year, the last couple of years, I've really switched much more towards the broader market indexes, just because I don't have the time to day trade like I used to. So I'm looking at, QQQ, SPY, the S&P sector ETFs. To me, that is about how many options trades are you doing per day, per month, per year. It varies greatly in each account. According to Ameritrade, an active trader is 4 trades per month. In the account that had the 94%, I was doing, I will say, 6 to 10 trades per month. So it wasn't even that active, right? It was fairly low activity. But one thing that I did change in one of my other accounts was I started doing some weekly options, and that changed things a little bit. I was doing more, but in the 94% account, it was, I would say 6 to 10 per month, depending on the month. Let's see. So in reviewing all this, it's tough to say, oh, well, QQQ was my best or SPY, but I did notice that there was actually one in particular that was I made more money with this specific one, and I'll explain why in just a second. And it's kind of surprising me as well, it was silver. So a bulk of my gains this year, and maybe it's because I just had so much of it. I mean, at one point I had over 10,000 shares of SLV. But what I was doing is I was selling puts, as you guys know, I was selling puts on SLV, which is silver. And when it would drop, I would sell them out of the money. If it didn't get there, I just collect a premium and get, 1 to 3% per month. And then it would fall and fill me on these, I would have 30 contracts. Boom, all of a sudden I got 3,000 shares of SLV, and I would sell covered calls against that. And what happened conveniently with SLV this year, and then this really helped, I think, take away some of my losses, was silver would rally up. So let's say I sold the 17 strikes, right? Just as an example. So I sold the 17 puts. It gets down there. It fills me on 3,000 shares. Okay, I'm now long 3,000 shares of SLV at 17. So I'd go out there and I'd do like a 1750 or let's say 1750 call. So now I'm looking to make some money, but I'm also collecting that premium, giving it 50 cents to move up, which would be $1,500 in profit. So it moves up, and next thing you know, it goes up to 1749 and closes there. Great. I've still got my 3,000. I've collected that premium, and I would go sell the 18s or the 1850s, and it just kept on doing that. So I was getting almost all the gains of SLV and the premium on top of it, which made for a really nice rate of return for the year. So something I'll be looking at this year, as well as silver. You know, I don't have any particular affinity to silver. I do like silver, but just seeing that it was pretty consistent for me was a very important piece for my trading year. Okay, so here's your chance to gloat. I know. I don't particularly like gloating. I think, uh-oh, my dog has got allergies like crazy. He's sneezing in the background. I'll let you guys gloat here. Don't lie. Just put in there, what was your, and the year's not done, but most of you probably know where you stand. What was in your best account this year, overall, and I don't mean one trade. I mean, I have a futures account that I literally made 2 trades in this year, and one of those trades was like a 50% rate of return. I'm not counting that in this either, right? This is, to me, my active results I can learn from. In your trading, what would you say this year was your best account's rate of return, right? From January 1st to where we are today, what percentage are you up? If you're down, that's one thing. But what would you say your best rate of return was for the year? And some of you are going to far eclipse what I have. Merlin, I also know that usually Tesla going up, down, or after consolidation. I'll get to that in a sec. We'll do that at the end, Alex. Let's just get through this session here, which I want to make sure I get a chance to wrap up and not spend too much time. But what would you say was your best performance this year in your account? Remember, the market's down 20%. Down horrendous? Oh, sorry, Chris. That's not I hate hearing that, but I don't really know what I can do to help there. Well, and Peasant's down? Did anybody have a positive year? Crikey, hope some people did. My worst was down 7. I actually have one account that, based off what's happening with Tesla, may actually turn negative here. Oh, Blue Diesel. All right. Well, okay, good. And I'm not saying good that you guys are down, but the 3 that did comment there, Chris and Peasant and Blue Diesel, you know, if you find yourself down, then this type of analysis is more important for you than anybody, right? You've got to be looking at this saying, hey, what have I done wrong? Clearly, there's things that you've done wrong. And I don't mean that in a condescending way, but obviously if the results aren't there, then something was done incorrectly. Let's see. I'm down, but I'm pretty sure I beat the market. I think. There you go. That's cool. All right, Jimmy. You know, it's funny because Jimmy, you're probably thinking to yourself, 5%. I didn't really make any. That's great. Anything above 0 is excellent, especially when the market's down 20. Dana, good for you. 12%. That's great. Overall account's down, but options, very small percentage. Okay. Well, and I feel like an ass right now because I'm going to show this number, and for me, it's not a great number. I think that this number, historically, looking at some of my rates of return over the years, could be a lot better. My best account this year was up 30.6%. And, you know, for me, I don't, and I apologize. This was not intended for me to be so like bragging here, but it just, you know, as part of the analysis, I strive for greater rate of returns than that. I like to have a bigger rate of return, but, you know, to have beaten the market, which is down 20%, and actually have 30%, it really makes me look at my results and go, okay, what did I do in that account? And conveniently enough, guys, it was actually in the 94% win ratio account. So for me, I think in explaining all this to you guys, and hopefully not hurting feelings too much along the way, it really is a very personal, private thing for you to do. But all of you, especially those of you who lost, you have to be doing this analysis, right? There's no way that you can continue on year after year after year losing like that, or you'll just bleed yourself dry. It's a slow, painful death. Thank you very much. Well, Lisa, if you said you did a lot wrong this year, you know, you are part of the community. I mean, you should, I think for all of us, especially with your losses, it's about standing up. It's almost like an Alcoholics Anonymous thing, right? It's like standing up and going, hi, my name is Merlin, I'm an alcoholic. Well, hey, you know, I'll use Lisa as an example. Actually, no, I'm not use Lisa, I want to pick on you. I'll use Alex here, since it says it was down 24%. You know, it's about standing up and saying, hey, my name's Alex. I lost 24% this year. Hi, Alex. Welcome. And now it's okay. Now I can let the reasons why that may have happened, right? It really is important that you do this, what I've done, for yourselves. And be critical. You have to be your own. No one's going to reprimand you or say, you suck or you can get better but yourself. So it's about, excuse me, it's about being very critical, picking on yourself. Don't just focus on the bad. In that, for those of you who lost money this year, not only are there bad things you've done, you have done some good stuff. I think that the key is finding out what it was. What did you do well that you can look back on and say, okay, maybe I need to exploit that. I mean, that's why I have this positives and negatives slide. And there's a lot more stuff that I wrote down in my analysis, but I wanted to kind of Cliff Note version it for you. You guys know right away what my plan is. My plan is to focus on this 94% win ratio account. I want to replicate that next year. And I'm also of the opinion that if I can get 30.6% rate of return, yeah, look, if I do that average every year, great. That would be obviously an impressive way to grow my wealth. But I will be moving more capital into the 94% win ratio account and doing the exact same thing. What's interesting about that account, by the way, is that's the only account. I'm going to turn the camera on for this one. That is the only account out of the 8 active accounts I have that I did not violate my rules one time. That to me, it's just making me smile because all of you know that you make mistakes and those things bring your accounts down. So the goal is to have your list of 10 laws or 20 or 30, whatever it takes for you, and say, I don't want to be making these mistakes again because it caused me to lose. This is the only account that I did not violate any of my rules. I don't have that information, Dave. That's an options account, so it's selling premium. So it's harder to calculate what the risk is on those. So I don't have that one in the accounts I was selling options on. For a January challenge, I suggest sticking to trade plan. November challenge was no bad trades, and it worked. Good, Tom. I think everybody needs to have that trade plan worked in. And again, each account I have in all of those 8 active ones, and I have more than 8 accounts, but it's the active ones that I'm focusing on here today. There are specific rules for each one. And part of it is I like to try different strategies, different techniques, and know that it's siloed. So if I make a big mistake with a new strategy, it's in this account over here. It's not going to spread into these other accounts. I think that was that was a comment that came in earlier from... where was that? Where was it? You guys have been talkative today. Where was that comment? I think that was from Pepe. When he's saying, hey, I don't understand your style. Are you supply and demand? I am supply and demand. I would say more importantly, I would put myself in a trend trader category and using trend trading in conjunction with supply and demand. So that's the main premise. However, I am using different strategies. I really want to. 92% right up, 7.75. So Scott, most of them are selling puts. So I start off by selling puts in that one account, in the 94% account. I would start by selling puts. Once those puts, if they were exercised, then I would immediately look and sell covered calls against those, generally at the strike price that I was executed at, so helping lower my cost basis. If they dropped any further from there, then I would maybe lower my the call options that I sold, and if it got taken away, it got taken away. Again, I'm not looking for the home runs in that account, and I think that's what allowed me to follow the rules. Sometimes we get a little overzealous and you get in that situation where you're like, man, I'm swinging for the fences here, and you make a mistake on that account or that trade, and next thing you know, you're spending the rest of the year trying to get out from it, like Lori did, right? Lori sounded like she had a pretty bad situation happen, $100,000 loss at the beginning of the year. Man, I've been there. I've done that. It is absolutely demoralizing. You feel like a loser, you feel like a failure, and you're like, it's hard psychologically to come back from a loss that big. So congrats to you, Lori. That should be your positive for the year, is you managed to get back. I would look at, for someone like Lori, what did you do to get out of a $100,000 hole? To me, that's your trade plan for the next year, for 2023. Whatever you did there, that's your trading strategy going forward, because clearly it worked. And to get out of a 100K hole is an impressive feat, especially the mental damage we do to ourselves when we're down that much. I've lost $100,000 a couple of times, and it's brutal, absolutely demoralizing. Okay, so that's it. And again, I'm kind of bummed that I see so many people with losing positions here, losing portfolios for the year. The good news is that most of you put in numbers that weren't more than 20%. And that's a good thing. That means you beat the market. So if you were down 7% or 4%, no one wants to lose money, but you didn't lose 20% like the average American did. So that's really good for you. But go back through and look and see what you did right. Be very critical. Don't pass over things like, oh, that doesn't matter. We will tend to not look at the stuff that really frightens us. Stare it in the face. Address it. Get over it. It's just part of doing business, right? And if you can't fix that, then you may want to look for another profession. I mean, I hate to say it, but if you can't fix the problem that's causing you to lose, then you'll probably continue to lose. Maybe not all of you. I probably do have more seat time than most of you. So, I guess that's the benefit of my trading experience, but also, I've learned from a lot of students as well. So having taught for OTA for so long, you learn from things from people all the time. Let's see. There was one in there, a question about OTA. Where was that one? Has OTA ever asked this of students? It seems like the whole court dilemma. Yeah, I'll read the question because this is pretty funny. Has OTA ever asked this of students? It seems like the whole court drama started with disgruntled students. Have their results improved? So here's the thing. This whole OTA bullshit was from 7 people. 7 people, and it actually came out that some of those people didn't trade. Are you kidding me? So this whole amazing company was brought down because of 7 idiots that... I'll give you these... I'm going to tell the story. But it's people who are complaining because, they may have made a trade and lost money. I think everybody understands you're not going to take a class on anything and come out being the best at it, especially trading. Trading takes a lot of work. So 7 people are the ones that initially started this whole issue, and 2 of those, from my understanding, are former OTA employees trying to bring down the house of cards because they were disgruntled and they were just very bad people, and I will leave that there. If you look at the number of people who have gone through Online Trading Academy, to have 7 people complain out of hundreds of thousands, that's great. To only have that little bit, but unfortunately, somehow this one worked its way up the food chain and ended up landing on the FTC. And the FTC in their lawsuit was also saying that people that lost, had losing accounts, were people that opened accounts and didn't trade. So how can you call that a loser, someone who opened an account and didn't trade? But according to the FTC, that was a losing trader. So no, the tough part, and some guy commented on one of our Online Trading Academy videos, he's like, well, OTA is a bunch of losers, everybody that loses money. It's like, okay, you're just showing me how stupid you are. You understand that there is no way on earth, it's not possible for Online Trading Academy to know what your results are as a trader, because OTA is not a broker. Online Trading Academy is an education firm that teaches how markets work and teaches strategies and teaches trading. However, a brokerage firm, an E-Trade, an Ameritrade, a Schwab, they can tell you what the performance numbers are for their students, right? So OTA can ask, but here's the sad reality. When you ask people, most of the time it's just the people who are doing well that are going to respond, because the people who are losing feel bad and don't want to, rehash bad memories, typically. So I don't even think if they did ask the community, you'd get a fair, honest response. There is no way to get that data, unfortunately. The OTA lawsuit is public information. The 2 original filers. Nope. Isn't that nuts? It's so ridiculous. And they took the free workshops. And, if you take a free workshop, there's hardcore training that goes in there to make sure that they don't say anything that they can't say. There's certain things you can't say. And unfortunately, as a salespeople do, somebody said something they shouldn't have said. And that's what was the basis for it. It wasn't the education. It wasn't the content. In my opinion, from reading it and looking at it, it was sales practices. So, and it wasn't even the sales practices. It was the fact that certain people were violating what the policy was at OTA, but unfortunately, that brings everybody down. Anyway, we could spend a lot of time going through there. Yeah, it's really sad to see how it all went down. I mean, and especially, being front row to it all was just really jaw-dropping, especially now that there's certain people whose perspectives of it are so negative, and they've never even been there. Puerto Rico? We did a road show in Puerto Rico? That's kind of cool. I didn't know we actually went to Puerto Rico. I'd love to be on that team. Anyway, that's going to do it. going to wrap things up here. That was kind of the gist of my trading review. You know, that is for me. That was a very personal piece at my end of year performance and trading analysis. I really hope that you follow what I've done here and do it yourself. It's time consuming. It's painful, especially for those of you who are down this year, but you have to do it. You have to. And from that, you write down, get out a piece of paper and write down what you did right, what you did wrong, what your best things were, what they weren't. And then at the end of it, say, okay, this is my worst trade, and here's why it was my worst trade. I did this and this and this. So your rule is, I'm not going to do that anymore. I know, Chris, you said you're holding on to some losers out there. Well, I think your New Year's resolution's got to be at a certain point, you say enough's enough, right? Maybe I write it down 5% or 10%. But you got to have a point where you say, I'm out, enough, leave it alone, move. So yeah, I hope it helps. It's something that most people don't do, but if you want to get to that point that you're just maybe leave your employer and you end up being a trader for the rest of your life and just trade, there's no way you're going to accomplish that if you don't do this type of stuff. If you don't have a trading plan, if you don't do end of year analysis, hell, even monthly analysis will probably help you, because a lot of trades you forget about. So do it. It's the tough stuff that people don't want to do. January challenge should be trade only the trade plan and do push-ups. I'll probably do a January challenge. We'll do that when we get to January. But yeah, I want you guys to think about what's your January challenge. We'll do one for January. I need to get back in shape. Mine's going to be I think I'll do 50 burpees a day is my goal. I know it's a tough one to do, but Dave said, my biggest struggles are when I try to make money rather than be correct about zones. Do you have anything you can add to help? So this is what changed it for me. And I want everybody to think this way. Forget about making money. Stop thinking about money. It's not about making money. Trading is about not losing money. And if you don't lose money, then making money becomes a byproduct. You can literally make money on accident in trading as long as you don't take those big losses. Now, of course, you can't have the losses so small that you're stopped out every time, but stop thinking about how much money you're going to make. Focus on making the trade, doing the trade right, and if it pans out and becomes a huge winner for you, great. But too many people are focusing on how much money they can make. And unfortunately, what will happen is you will forget about risk management. You'll throw it to the wind and go, oh, I don't want to lose this. And next thing you know, you're going to lose it because you don't have risk management. So forget about making money. Focus on not losing it. Focus on a strategy and implementing something that you can look at the metrics and say, okay, I've got a good reward to risk ratio. I've got a good win percentage. Now what can I do to bump those two numbers up? And then it's smooth sailing from there. Not smooth sailing. There's always bumpy water ahead in the ocean. But for a while, it'll be smooth sailing until the next market direction changes and throws you off. Let's see. Ken says, I can pick the correct trade and get afraid it will lose, then make bad decisions. Well, don't be afraid it's going to lose. I mean, that's like opening a relationship right away with somebody and thinking at the very beginning, oh, this is going to fail. Well, then it's going to fail, right? You need to, it's to some degree, you need to manifest your destiny. Say, okay, I chose this trade because of this, and this. I've gone through odds enhancers, and it has a high probability of success. Great. I'll put a stop loss just in case I'm wrong. If I'm wrong, I got a stop loss. But if not, great. I've got all these good reasons to support the trade. So don't fear it, Ken. You should be embracing the trades that you find, especially if you have a decision support network around you with regards to technical analysis, fundamentals, however you're making your trades, and move forward from there. Let's see. Pepe. Hey, Merlin, let's say you have a couple $100,000 in cash. What alternative investments would you put your money into? Not very risky. Depends on what kind of rate of return you're looking for. A couple $100,000, you can't really do much with I-bonds, right? Because you only do $10,000 a year. Good one, Thomasina. Stop loss equals a prenup. Yep. That's pretty funny. I like that one. Yeah, that becomes a little more complicated. I think that depending on what the situation is, there's cash value life insurance, which used properly can be a good vehicle, but there's all sorts of fees involved with it. Whole life and term stuff, that's to me a rigged game for the salesman. Alternative investments, I don't know. I personally, just having done what I've been doing, I would just look at options and be selling premium and collecting premium. I don't know if I would be looking much at too many alternative investments. No. Remember, if you look, generally alternative investments have much more volatility. And I would say if you go to the bond markets, you can lock up a 5% rate of return for the next 10 years, or a 4% rate of return for 10 years. So, there's always that. But is 4% rate of return enough for that 100,000 or plus investments? Looking for 5 to 10. I personally, if it was me, I would, if I'm looking for 5 to 10%, I would do options, and I would just sell premium every month. I put it in there, and I would do, instead of doing 1%, you could do a 0.5% per month strategy, which is like, you're never going to get executed. It'll be so far out of the money, it doesn't matter. And do it once a month. Very easy. All right. Okay, so January 1st, we will go over the objective or the challenge for January. And then tomorrow, I'm going to do a little bit of year-end trading review of what, statistically, the numbers, what happened in the marketplace. To me, that'll be kind of fun. I have some data that I collected. We'll look at some of the market pieces. We will also look at our S&P 500 performance. Now, of course, it's going to be slightly off because I'm not doing a show on Friday, and, well, markets will be there. So we'll be 1 day shy of the end of the year, but we will look at our forecast for the S&P, which we did in January. So have your market analysis hats on ready. Should be fun. If you guys have any comments, questions, feedback, let me know. Send them on in at TraderMerlin@gmail.com on the screen, or post them down below any YouTube video. I didn't get a chance to look at the comments today, but I will look at whatever comments are there and incorporate those into the end of the show tomorrow. Hope you all had a fantastic trading day. Hope you learned something. If you are down on the year, it's not the end of the world. You have to make it a learning lesson. It's an expensive one for some of you, so learn from it and hopefully make your trades much, 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 much better. Okay, everybody, that's going to do it. Keep your comments on YouTube so I can answer those on tomorrow's show, or email me, TraderMerlin@gmail.com. That's it. Have a fantastic remainder of your day. Hit that like button if you enjoyed today's show. Take care, everybody. I will see you on Thursday's show.